Greetings, ladies and gentlemen. I go by the name of Dotlo, and I would like to welcome you guys back into today's video. I would like to welcome you guys back into my YouTube channel tutorials program, where we inspire students to achieve greatness through their mirror learning. So, without wasting any more of your time, let's get straight into today's video. Okay, so today we'll be focusing on our accounting equation. So the sole purpose of this video is to help you guys understand how to apply what I did on my previous video. So for example, so this is the question paper I'll be doing. So this is the question paper I'll be doing. I think it's October 2020. So this is the question paper that I'll be doing. Question 1. Okay, question 1. So guys, don't forget, if you find this video helpful, do leave a like, and also if you haven't subscribed yet, please do subscribe so that you don't miss any of our future content. So if this video is helpful to you guys, do like and also share with others whom you think might find this video helpful. So by doing that, you'll also be helping me, just like I am trying to help you guys. So I hope end of this video you find this video helpful, guys. Thank you. So I'll be going between these two tabs, which is our Excel and also our question paper. So Excel, as you can all see, we have that previous information that we are doing on the previous video, the information from the previous video. So I'll be going back and forth just to help you guys understand clearly as to what is how you handle this question. Because as you can see, we still have our source documents, our journals, and then we have the question, the answer sheet. Actually, yes, this is our answer sheet. So answer sheet, we have our source document, account debited, account credited, asset. Okay, so this part here, what? Magenta. So this part here, accounting equation. Just do that. Okay, so this is our accounting equation. We have assets, owner's equity. Asset is equal to owner's equity plus liabilities. Okay, going back to our question paper. So the structure I got it from our question paper. As you can see, the question paper here. The question paper, we have number 1 example, which is source document, account debited, account credited, and also our accounting equation. So assets, owner's equity, liabilities. Straightforward. Okay, so let's firstly analyze the example. So we are given an example, so let's quickly try to analyze this example. So they're saying the owner received a rent for the building that he let to Mr. Duke. To M. Duka 8,000. So this person, so the business is receiving what? It's receiving 8,000. 8,000 for what? For rent. So in this case, we have our source document, account debited, account credited, and our accounting equation. So our source document. So we start with our source document. What is the source document? So we know this transaction is going to affect what? This transaction is going to affect our CRJ. I think if I'm mistaken, what is this? So this transaction will affect our CRJ because we are receiving money. We're receiving money for rent. So it's going to affect our CRJ. So since we are going to be receiving money, so it's going to affect our CRJ. So here's our source document that's going to be affected. So let's see what they say. Which source document is affected? We have duplicate receipt. So of course, our receipt will have our duplicate receipt because our CRJ is being affected. And then now account debited and account credited. We need to know which two accounts will be affected. So here they're saying our bank and our current income. And then the bank is debited, current income is credited. Okay, so current income. So the two accounts being affected. What's happening here? We're receiving money for rent. So the rent account will be affected. So this is rent income. So account debited is our bank and account credited is our rent income. Okay, so account debited, account credited. Okay, so rent. So let's go back to our information, and then we have our accounting equation here. We have our accounting equation. So the bank will be affected. So here's our bank. So let me just say rent income. So our rent income will also be affected. So we're receiving what? We're receiving 8,000. We're receiving 8,000 for what? For rent income. So our income, so our rent is part of our, so the rent is part of our, rent income. So rent income is part of our incomes. It's going to fall on our income, and we know that the income increases on the credit side. So meaning we're going to have that 8,000 on the credit side. Bank is part of our assets. So assets increases on the debit side. So hence why we're going to have this 8,000 on the debit side. So this is why account debited and account credited. So this is our account debited, account credited. Straightforward. So hence why here on this question paper we have our bank and our account debited, and then have our current income under our credit side. Going into our accounting equation. So we know we have these two accounts. Let me go back to our accounting equation. So we know we have these two accounts that are being affected. So coming to this accounting equation, the rent income is part of what? Rent income is part of our income, isn't it? We know that. So how does our income affect our accounting equation? So our income affects our accounting equation on the owner's equity. As you can see, under our assets, this is our assets. Income is part of our owner's equity. So owner's equity, we have what? We have income. So this income, it's affecting our owner's equity positively. And then we also have our bank as an asset. So meaning our asset also is going to be affected. So how is our asset going to be affected? Negatively or positively? Okay, let me just change the signs because we're going to be a minus, positive effect, and then positive. Okay, so this is how it's supposed to be, because we know our rent increases on the credit side, because we know rent is part of our income. We are increasing on the credit side. So looking at these two accounts, I said that our bank is an asset. So bank, is it increasing or decreasing? Our bank is increasing with 8,000. So it's going to affect our asset section positively. Hence why here we have that plus 8,000. So we have plus 8,000 because our assets are increasing. Owner's equity, we have plus 8,000. Reason being, our income affects the owner's equity positively. And then the liabilities will not be affected. I hope that made sense. If ever maybe there's something you didn't understand on this, just rewind the video and then you'll get a clear understanding. Okay, so I'll be dealing with these 4 transactions. So I'll try to deal with these 4 transactions as fast as I can. Okay, so now transaction number 1, they're saying the owner increased her capital contribution from 600,000 to 750,000 and additional capital. So what happened? We have capital of 600,000, and then the owner decided what? No, I need to raise this capital to 750. And then the owner injects an additional what? When you say 750 minus 600,000, you'll get what? 150,000. So meaning the owner increased her or his or her capital, her capital by what? By 150. So we get that part. We all get that part. I hope we all get that part. So now we need to know. Let me just try to split screen this. Okay. Okay, so that's not working out. Let's just say. Yes, this is fine. Okay, so increase the owner's equity by 75,000, 150,000. So increase the owner's capital. The owner increased the capital by what? 150. Okay, fine. So this transaction, we need to know this transaction is going to affect what? Which channel is it going to affect? So since the business is receiving that 150. The business is doing what? Is receiving that 150. So since the business is receiving that 150, this is going to affect our CRJ. So this transaction is going to affect our CRJ. So since it's going to affect our CRJ, we know the source document under our CRJ is what? The source document on our CRJ is what? Receipt. It's going to be our receipt. So transaction number 1. Okay, so maybe I need to have made Kapunyana for 1 there. But then get the idea. It's what? Receipt. So transaction number 1 is going to be our receipt. And then from the transaction, we need to know which account will be debited and which account will be credited. So we are receiving money for what? For capital contribution. So 2 accounts that will be affected. So since the business is receiving money, where is that money going to? That money will be deposited into our bank account. So meaning the bank will be affected. What other account will be affected? So since this transaction is what? Is capital contribution. It means what? The capital account is also going to be affected. So now we know the 2 accounts that will be affected by this transaction. We know the 2 accounts that will be affected by the transaction. We said it's what? It's bank. Okay, yeah, it's bank and capital. So our bank and capital will be affected. We know. Wonderful. So now we need to know which account will be debited and which account will be credited. We need to know which account will be credited and which account will be debited. Eish. What is it mean? So we need to know which 2 accounts will be debited and which account will be debited and which account will be credited. So now the bank, what's going to happen to our bank account? What's going to happen to our bank account? So now we have 2 accounts that will be affected. So capital. So we said our bank will be affected and also our capital account will be affected. So the bank account, how is it going to be affected? Is there money coming in or money going out? So the money is coming in. So we're receiving what as the business? We're receiving 150,000. 150,000. We are receiving 150,000. We are receiving 150,000. And then our capital. What's happening to our capital? We're increasing. The owner is increasing her capital. The owner is increasing her capital by what? By 150. The owner is increasing her capital by 150. So the capital account, we know it's increasing where? On the credit side. How do we know that? We have our debt click. Debt click says capital on the credit side is doing what? It's increasing. So 150, capital increasing. Simple ABC. Simple ABC. So now our 2 accounts that are going to be affected, capital and the bank. So going back to our answer. So which account will be debited? We know that it's the bank account. And then the credited account will be capital account. Now we're going to our accounting equation. We are going where? Accounting equation. Our accounting equation. So we know these are the 2 accounts that will be affected. So we'll start with our bank account. Bank account, is it an asset, owner's equity, or liability? So we know our bank account forms part of our asset. Bank account forms part of our assets. How do we know that? We know that under our assets we have cash and cash equivalent. Under our cash and cash equivalent, we have our bank account. So it forms part of our asset. So meaning the asset will be affected. How are the assets being affected? Positively or negatively? So the asset is being affected positively. So meaning we're going to have plus 150. So it's going to be plus 150,000. on our asset. Let's see, plus. Okay, so the plus doesn't want to stick. Let's see, plus 150. Okay, so the plus doesn't want to stick there. Okay, let me see. What else can I do? Let's see this plus. Okay, so I'll just do it like this. So it's plus 150. Our assets are increasing by 150,000. Okay, so our capital also is being affected. So we know capital so capital forms part of our owner's equity. So how is the capital being affected? Positively or negatively? So going back to our capital account, it's being affected positively. So it's also plus 150 because the owner is increasing her capital plus 150, 1, 2, 3. Just like that. So will our liabilities be affected? No. So we're going to have a 0 under our liabilities. I hope this makes sense. So this is how you deal with that first transaction. This is how you deal with this first transaction. Okay, so we're moving on. Transaction number 2. So transaction number 2, the same one. Mr. Manda, a debtor who owes 3,500, has been declared insolvent and part of his debt has to be written off. The layers informed you that an amount of 3 cents in the rent will be paid and the rest must be written off. I hope you understand that. So they're saying the layer informed us an amount of 3 cents in the rent will be paid off and the rest must be what? Must be written off. The rest must be written off. Okay, so let's do that quickly. So a debtor who owes a person 3,500 has been declared insolvent. So insolvent meaning this person will not be paying us anymore. Like we can't, maybe for reasons like we can't find this customer, or this customer ran away with our money. Such reasons can be such reasons. So now this person will no longer be able to pay that 3,500. But then they're telling us that what? An amount of 3 cents in the rent will be paid and the rest must be written off. So written off being what? The debt. So now what are we focusing on what are we focusing on in this transaction? We'll be focusing on that bad debt that will not be paid. That's where we're going to focus. So we're going to focus where? Our credit losses. So credit losses, we need to know source document. Which source document does it affect our credit losses? Does it affect our cash receipt, cash payment? What does it affect? So our credit losses is going to affect, since we are talking about the credit losses. If we said this is affecting our CRJ, no money is coming in. Because it's a credit loss. Credit loss, it means what? It means now that expense is part, the expense, the loss. We as the business, we are taking the loss. We are not receiving any money. We lost that money. So CPJ, that doesn't mean that money went out. It simply means that we made a loss on that money. We made a loss. We were expecting money, but then that money will no longer be coming. So this one affects our general journal. So this affects our general journal. So you can say journal voucher. These are source documents. There's your source document. So you can say memorandum. Okay, so let's just say memo. Easy memorandum. Explain. Journals. Memorandum. Okay, yeah, it's memorandum. So memorandum, and then the 2 accounts that will be affected. So what are we dealing with? We are dealing with that loss, the write-off. We're writing off a person. So when we're writing off a customer, what are the two accounts that will be affected? So this customer was a what? Was a debtor. So since this customer was a debtor, it means what? Our debtors control was affected. So in this case, it's what? Trade receivable, the new terms, trade receivable. So our trade receivable will be affected. What else will be affected? Our credit loss. Credit loss. Credit losses will be affected. So those credit losses will be affected. So our trade receivable and our credit losses will be affected because why? We are trying to write off that amount. So we're trying to write off an amount. So since we are trying to write off an amount, these two accounts will be affected. So now we know the two accounts that will be affected. So going back, so we said the two accounts will be what? Trade receivable and then our trade payable. So trade, I just say trade receivable and then credit losses. Okay, so this video is getting too long. Credit losses. Okay, so trade receivable. Trade receivable, is it an asset, owner's equity, or liabilities? On our debt league. Debt league, trade receivable, where does it fall under our debt league? So it is part of our assets. Our trade receivable is part of our assets. So meaning debit side is increasing, credit side is decreasing. So debit side here, we can just say have this. We can say plus. Can have that plus and then the side is negative. Okay. Our credit loss. Our credit loss. What is our credit loss? Where is it on our debt league? Is it an expense, asset, drawings, capital, income, liability? So credit loss forms part of our expenses. It forms part of our expenses. How do we know that? We know that when we're doing our income statement, guys, when you're doing your income statement, your credit losses, where does it fall? It falls under our other operating expenses. So it is an expense to the business. There's credit losses. It is an expense to the business. Okay, straightforward. So now we know our two accounts that will be affected. So next step, what we need to know is this. We need to know which account will be debited and which account will be credited. Which account will be debited, which account will be credited. Okay, so maybe first let's start with that calculation. Let's start with the calculation. So they're saying what? Mr. Manda, a debtor owes the business 3,500, has been declared insolvent and part of his debt has to be written off. The layer informed you that a 30 cent in the rent will be paid and the rest will be written off. So the rest will be written off. So if 30 cent of one rent will be paid, the rest being what? 70 cents. So meaning 70 cent will be paid, isn't it? 70 cent of rest will be paid. So let's go to our calculator. Okay, our calculator. So 70 cent will not be paid. So 70 cent will not be paid. So how do we write 70 cent? I think it's 0.70 cent of the rent. So 70 cent times 3,500, which is equal to 2,450. So this 2,450, this is our credit loss. So this is the loss we're going to make from this data of 3,500. So this is the loss we're going to make. So we're going to make a loss of 2,300 and 2,450. So 2,450. So we're going to make a loss of 2,450. So now we need to know which account will be debited and which account will be credited. Coming the side. So now our trade receivables, will it be increasing or decreasing? We're writing off a debtor's account. So when you write off a debtor's account, is that account increasing or decreasing? So that account will be decreasing. Why? Because we are writing it off. So when you write off an account, a debtor's account, you are it's more like it's decreasing. You're decreasing the trade receivable. So it will decrease by what? By 2,450. And then our credit losses will increase. Will increase by what? By 2,450. So the credit losses is increasing while the trade receivable is decreasing. So now we know account debited will be our credit losses, and then account credited will be our trade receivables. I hope I make sense with this video, guys. I hope you understanding what I'm trying to say. I hope you're understanding everything I'm telling you guys. So account debited is our credit losses, and then account credited will be, what is it, Conche? Trade receivable. Our trade receivable will be credited. Makes sense. So we know we're still here. Okay, so now we're going to our accounting equation. So I see we're wasting so much time in this. So it's been 30 minutes already. So let me just try to push fast. So the reason why I'm taking so long is because I'm trying to make sure that you guys really understand what's happening here, because most of you guys are struggling with our accounting equation. So I myself also still struggle with this accounting equation. So accounting equation is one of the tricky topics. But then if you get this, they click and our accounting equation, now you're done. Accounting, you will know accounting. So let's move forward. Let's keep on going. So far, if this video is helpful to you guys, just leave a like. Okay, so we move. Where are we? What are we doing? Going to accounting equation. So now we know this account debited, account credited. So let's start with our trade receivable. Trade receivable, what is it? We said it's an asset. It forms part of our assets. So what's happening to our asset? Are they increasing or decreasing? What's happening to this asset? Is it increasing or decreasing? So this asset is decreasing. So since this asset is decreasing, it's decreasing by what? 2,450. So this asset is decreasing by what? So decrease by 2,450. It's decreasing by 2,450. The asset is decreasing by 2,450. Now, our credit loss on our accounting equation. Credit loss, it forms part of what? We already said it's part of our expenses. So where is our expenses on this owner's equity? It's on this accounting equation. So our expenses are under our owner's equity. So meaning our owner's equity will be affected. How is this owner's equity being affected? Negatively. So our owner's equity is being affected what? Negatively. So it's going to be a minus 2,450. And then our liabilities are not affected. So we have a 0 under our liabilities. So far, so good. So I'm done with that. So I hope you understood this. I hope so far we're getting this, guys. So let's move on, because I'm wasting so much time on this. And then they're saying the business established a cash float for its cash registers by cashing a check to the value of 500 using a varying impress system. So this is the business established a cash float for its cash registers by cashing a check to the value of 500. So we are cashing a check to our cash float. So us as the business, we are cashing a check to what? To our cash float. So we're taking money, we're taking it to our cash float. So source document. Which source document will be affected with this? So since us as the business, we taking a check of 500 to cash float. It means what? It means it's going to be our cash payment journal. So cash payment journal, we know what is our cash payment journal. The source document will be our check counter foil. So let me just copy and paste it. Same time. Our check counter foil will be our source document for this particular transaction. Okay, so what did I say contain the transaction? the business establishes a cash flow for its cash registers by cashing a check to the value of 500 to cash flow. Okay, so now we need to know which two accounts will be affected. So now we need to know what? Which two accounts will be affected. So we're cashing a check to, where is the check going to? It's going to our cash flow. So meaning cash flow will be affected. Cash float. Our cash flow will be affected. That's one account that will be affected. Another account, what's happening? We're cashing a check. So we're taking money to cash flow. Where is that money coming from? The money is coming from our bank account. So bank and cash flow will be affected. Bank and cash flow will be affected. So now we need to know from these two, which account will be debited and which account will be credited. So which account will be debited and which account will be credited? Let me just come here. Okay, so we have bank, then we have cash float. So these two form part of what? Form part of our current assets. It forms part of our current assets. So we see we have cash float and our bank. So since they form part of our assets on the debit side they are increasing. So meaning these two are correct. On the debit side they are increasing, credit side they are decreasing. Okay, straightforward. Okay, so now we need to know which account will be credited and which account will be debited. So what's happening? We're taking money to our cash flow. So since cash flow is receiving money, what's going to happen? It's going to increase. Increase by what? 500. And then the bank account is going to decrease by what? By 500 also. The bank account decreases by what? By 500. Simple ABC. So now accounting equation. Cash flow, is it an asset, owner's equity, or liability? We already said it's our asset. So meaning our asset will be affected. How will our asset be affected? Positively. Bank, is it an asset, owner's equity, or liability? It's also an asset. So how is this asset going to be affected? Negatively. So meaning coming back to our question. So here we know our cash flow will be debited, and then the bank will be credited. And then we know that these two amounts are assets. So meaning our assets will be the asset we said on the first transaction. Our cash flow, we know our cash flow will increase by 500. Cash flow will increase by what? 500. And then okay, so this thing doesn't want. Okay, let me just do this. And then what else going to our bank is also affected. So as the bank is also an asset. So how is the bank affected? The bank was affected negatively, so meaning it's minus 500. So let me just try to do this and see if this will not work. Yes, it needs to be something like this. Bam bam. Yeah, so it needs to be something like this. So plus 500 for cash flow, minus 500 for the bank, and then our owner's equity are not affected, and then also the liabilities are not affected. So this is how you're going to record that transaction. So let's move on. So transaction number 4, they're saying the bank returned Miss who? Miss Val, what check for 800. The check was dishonored due to insufficient funds. So what happened? So initially we received a check. We received a check from who? From Miss what? We received a check from that lady, and then Miss what we took the check to the bank so that the bank can cash out the money. So now when the bank tries to cash out the money, what happens? There is insufficient funds, so the check bounces. So when that check bounces, where are we going to see? Where are we going to see? Not where are we going to see? So the check bounces. So when the check bounces, when are we going to see that? We're going to see that on our bank statement. The bank statement on the end, at the end of the month, the bank statement comes back. And when that bank statement comes back, it comes back saying what? Saying there was a dishonored check. There is a dishonored check from Miss whatever of 800. So now this transaction, what's going to happen? Source document. We need the source document. So what's going to happen? So that check, we received the check, isn't it? So the bank returned the check to us. So what are we going to do with that check? Are we going to keep the check, or are we going to return it back to Miss whoever? So we're going to return back that check to Miss Vule, or what's her name. So we're going to return back the check. So when we return back that check, so initially we received the check. So now when you cancel a check, you're going to cancel it on our CPJ. Is it our CPJ? Yes, so we're going to cancel that check on our CPJ. But then in this case, so this one, not the check counterfoil that's been affected. So we're going to see that the check has been cancelled on our bank statement. So we're going to see that cancelled check on our bank. When we receive the bank statement at the end of the month, that's where you're going to see that the check has been cancelled. So meaning here, the source document will be having it's our bank statement. So we'll see that on our bank statement. So now we need the two accounts that will be affected by the transaction. Two accounts. What are the two accounts that will be affected by this transaction? What's happening now? Reread the saying, the bank return means whoever's check, the check was dishonored. Okay, so the two accounts. So we receive the check. So when we receive a check, the bank account will be affected. It's receiving money. So as we receive money, the bank account needs to be affected. The bank account will be affected. The bank account will be affected. Now, since this is a dishonored check, we're returning the check back to that person. So since we're returning the check back to that person, this simply means what? Even if this person had bought with cash, with a check, like the customer came in and then said, I want this and this and this, I'm going to be paying using my check. And then they wrote the check to us, and then so now since we're returning back that check to this person, so once we return back the check, it means now that that person is owing us as the business. So since that person is owing us now, what's going to happen? That person is part of our debtor. So now she is a debtor to us. So meaning our trade receivable will be affected. Our trade receivable, I'll just say TR. Trade receivable will be affected. So we now know the two accounts that will be affected. We know the two accounts that will be affected. So we know the two accounts that will be affected, which is our trade receivable and our bank account. Okay, straightforward. So what happened here? How is our trade receivable and our bank account affected? So now this person had paid us. Now we return the check back to that person. So what's going to happen? The debt of that person is increasing. The debt of that person is increasing by what? 800. So the debt is increasing by 800. So initially we thought we received money. Initially we thought we received 800. So now we didn't receive any money because insufficient funds. So our bank account will decrease by what? By 800. Bank account will decrease by what? By 800. So we have trade receivable in our bank account. So trade receivable in our bank account, they both form part of our assets. They both form part of our assets. I hope you all know that by now. They both form part of our assets. So one is affecting the asset section positively, the other negatively. Straightforward. So coming back to our question. Account debited. Which account is debited? So this is the account debited. Account debited is our trade receivable. So in trade receivable will be trade receivable. And then what do we have? Consumer bank. Bank will be credited. Straightforward. So we know that these two are both our assets. So one is increasing, one is decreasing. So plus 800 for trade receivable. And then what we have again? We're going to have plus, not plus, minus 800 for the bank. Okay, so let me just try to do this. Tax rep. Okay. So we're going to have something like this, and then our owner's equity is not affected. This is not affected also. So I think we are done with that accounting equation. So that's how you deal with your accounting equation, guys. So that's how you deal with your accounting equation. So I hope this video is helpful to you guys. So if this video is not helpful to you guys, do leave a comment on what you do not understand, and I will try by all means to explain it further on the next video if I must. Okay, so our liabilities are not affected. So let me just try to check something first. So I know I also have this question paper. So you also have this question paper here. Same thing, still our accounting equation. Okay, so they're saying the owner deposited 200. So capital contribution, we know how to deal with our capital contribution by now. And then they said number 11, sold equipment to Royal Gardens to the value of 300,000 for cash. Okay, so if we were to do that, so let's try to do that quickly. So I'll be doing it fast, extremely fast. So what happened? We sold equipment. So since we sold, our CRJ will be affected. So since our CRJ will be affected, our receipt, so you can say receipt, and then two accounts that will be affected. So we sold what? We sold equipment. We sold equipment for cash. So since we sold equipment for cash, just confirm. So we're doing this transaction on the 11th. Sold equipment to Royal Gardens for the value of 300,000 for cash. So since we sold equipment for cash, our bank will also be affected. So now we need to know which account will be debited. So now I'm doing it the fast way. So showing you guys, if you understand our accounting equation, so if you understand this information, everything becomes simple. So now we know we have these two accounts. So what are we doing? We are selling what? We are selling this equipment for cash. So meaning money is going into the bank account. So since money is going to in the bank account, where does it increase? Is it increasing on the debit side or the credit side? So now we know that the bank account is an asset. Asset increases on the debit side. So since asset increases on the debit side, and the bank will, so it means the bank will be affected positive. The bank will be affected on the debit side. Bank. The bank will be affected on the debit side. Credit side, equipment. Our equipment, we're selling equipment, so meaning our equipment are decreasing. So equipment and the bank account, these two are both our assets. So these two are both assets. So since they are both assets, so they said increasing by 300,000. So plus 300,000, and then also minus 300,000. The minus is for our equipment. So our bank account is increasing by 300,000 because it's increasing by 300,000 because we sold equipment for cash. So since we sold that equipment for cash, our thing will increase. Our bank account will increase because we sold it for cash. Our equipment will decrease because we sold equipment, and then our owner's equity will not be affected. fast. And then next, quickly. And then we have 24. They say purchase trading inventory from. We purchased what? Trading inventory for cash. So we purchased. So since we made those purchases, which source document will be affected? CPJ. CPJ is what? Cash counterfoil. Copy, paste. So our cash counterfoil will be affected. So let's just paste it. And then what else? Our two accounts that will be affected. So we purchased what? What did we purchase, Konje? We purchased inventory. So since we purchased inventory, our inventory will be affected. Inventory. Our inventory will be affected. And also what? We purchased that inventory cash. So meaning the bank will also be affected. So the bank will also be affected. So now, which account will be debited? Which account will be credited? What are we doing? We are buying what? Inventory. So since we are buying inventory, it simply means our inventory will be increasing. Inventory will be increasing, and inventory increases on the debit side. Why? Because inventory is part of our asset. So inventory is an asset. Inventory is our asset. So increases on the debit side. And then the bank, we purchase that inventory cash. So meaning money will be leaving the business. So bank, credit side, straightforward. And then amount asset, I think it's 180. 1, 2, 3. So supposed to say plus. Plus 180. And then we also have a minus what, Konje? Minus 180. Why? Because these two are both assets. So they are both assets. So meaning our asset section will be affected. Briefly. Now we understand. Now we understand this, guys. By now we understand this. So I'm just moving fast because we already wasted so much time on this video. We didn't waste time. Already so much time has been spent on this video. Yes, no time has been wasted so far. Don't believe that there's any time wasted so far. Only us learning. So we've learned so much already. And I hope this video is helpful to you guys. So if this video is not helpful to you guys, you won't leave a like. So if this video is helpful to you guys, please do leave a like. It's so demotivating to see that you have 200 views and then only 5 likes. So it means you're only affecting 5 people. Hey, tough world. But then we'll keep moving, we'll keep pushing for those 5 who keep on liking. Okay, so we move. What are we doing? We're doing our pay 20 what? The same purchase stationery on credit to the value of 700. So we purchased what? Stationery. Value of. So we made purchases. So we know when you purchase, it's cash counterfoil, né? So we made purchases, check, counterfoil. And then 2 accounts that will be affected. Stationery will be increased. Stationery will be affected. Stationery will be affected. And also what? We buying that stationery what? On credit. So since we buying the stationery on credit, it means our trade payables will be affected. Trade payables will be affected. Straightforward. And then now we need to know which one will be debited, which one will be credited. So since we're buying stationery, so it means our stationery will increase. So stationery, is it an asset, owner's equity, or liability? Stationery forms part of our assets. So assets increase on the debit side. So our stationery will be increasing. So stationery. And then we have trade payables. Our trade payables, what is it doing? Is it increasing or decreasing? Payables. So our trade payables will be increasing also. So the trade payables is increasing because we are increasing our debt by buying that stationery on credit. We are increasing what? Our debt. Our debt is going up. So trade payables is part of our liabilities, current liabilities. It forms part of our current liabilities. So the liabilities, we know that our liabilities increase on the credit side. So hence why we have this trade payable on the credit side. Straightforward. So 700, ne? Oh, what? Yes, so we bought 700. So it means stationery is doing what? Is increasing. It's increasing by what? By 700. So plus 700. Trade payable. Is it an asset? Is it Is our trade payable an asset, owner's equity, or liability? So I've already said that our trade payables forms part of our liabilities. So our liabilities, will they be increasing or decreasing? Are we paying or are we increasing our debt? In this case, we're increasing our debt. So we're going to have plus 700 also. Plus 700. That's pretty much how you deal with your accounting equation, guys. That's pretty much how you deal with your accounting equation. I hope this video was helpful to you guys. I hope this video was helpful to you guys. So we're on November now, almost close to November. So you guys need to make sure that you kill those final exams. So I'll be posting videos each and every single day. I'll be posting each and every single day. So also our computerized, our CFS, I'll be posting videos on our CFS concerning doing a new campaign. So I'll be posting a video doing a new campaign most probably by tomorrow. If not tomorrow, it will be day after. But no time to rest, guys. No time to rest. So that's pretty much it concerning our accounting equation. So if this video was helpful to you guys, please do leave a like and also subscribe so that you don't miss out on any of the videos that I'll be posting. So exam time, guys, exam time. We need to make sure that we capitalize. So I think this is all from me. Yeah, so don't forget to share with others whom you think might find this video helpful. Also subscribe, like the video. So I think this is all from me. So have a great night, guys. Bye.